Hi, Leeb Group viewers. Greg Dorsey here. It's a Tuesday, June 1st. Well, the market promptly removed any enjoyment anyone may have had left over from the long holiday weekend. The news flow just seems to get worse and worse. BP's top kill and junk shot efforts were for naught. The oil spill threatens to continue for months to come. And hurricane season upon us now, with forecasters expecting an above average number of storms this year. On the other side of the Atlantic, Spain's banks are asking for handouts now as the EU's debt crisis drags on. The euro is hanging in there, really thanks in large part to central bank intervention, it appears. Economic data from China and other parts of the globe suggest the world economy is slowing, threatening our own recovery. And now tensions in the Middle East are heating up on top of the high state of alerts in the Korean Peninsula. Now, with all that going on, you'd be understood if you have a dour outlook. In the stocks here in the U.S., by day's end, we're off sharply, led by the energy patch. The oil service stocks were off by an average of 9%, if you can believe it. The selling in oil stocks really was indiscriminate. We wouldn't go near something like BP, as their liability really isn't quantifiable here. But the world just isn't going to stop using oil altogether. Companies like Nabors Industry and Schlumberger offer good value here if you have a patient view of where things are headed. As for the U.S. market as a whole, the tone doesn't seem to feel like there's another leg down is underway. Chances are we'll hold last Tuesday's lows and then muster a rally that carries us back towards 1,200 on the S&P and Dow 11,000. But expect plenty of volatility along the way. And should the market break those recent lows, we might very well temper that somewhat optimistic view. So stay tuned.